The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Hey, Money Masters and Treasure Hunters, welcome to the September 4th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Why? Because each and every day, you and I, we must live up to our potential. That's something we've got to master each and every day. So let's begin with a few empowering beliefs. The first one by Ralph Waldo Emerson. He went on to say, the only person you are destined to become is the person you decide to be. Think about the power behind that. I totally agree with Waldo out there. How about Henry David Thoreau? He went on to say, go confidently in the direction of your dreams. You know what that means to Stevie, right? That means massive. Take massive action out there. He went on to say, live the life you have imagined, folks. I agree with that. And then Brian Tracy, he went on to say, successful people are always looking for opportunities to help others. Unsuccessful people are always asking, what's in it for me? Well, if I can help you, you just give me a call at 877-927-6648. We can take a look at your stock chart, answer your question, anything it is that you'd like. You know, the question for each of us is not what we would do if we had the means, not what we would do if we had the time, the influence, or even the educational advantages. The question is always, what will we do with the things that we have? And you know the reason why, and that is because each of you out there, you have an amazing power within yourself. Let's go check out the amazing power of these markets out here. Right now, we've got the Dow up 35 points, trading out at 14,869. S&P up about 7 points at 1647. NASDAQ up 20 points, leading the charge on the way up here. Trading out at 36.33. Just got squeaked out by the NDX 100. That's up 0.6%, up 19 points at 31.11. Of course, Apple having a big move here this morning. New York Stock Exchange is the laggard out there. That's got to make you say, something to think about. Net advancing issues right now, 663. The number, in order for the Bulls to actually take possession of the ball today, is 636. So we'll see how this day ends up. Let's start off by taking a look at the S&P 500 right now, trading out at 1646.81. What is it trying to do? Well, number one, what it's trying to do is get up here and test the top of this descending price channel out here. That probably will take it into a price range of about 1658. 1658 is the dead cat bounce. The dead cat bounce coming off of the highs out here from August the 2nd, out at 1709.67, down to the lows out here at August the 28th, down at 1627.47. Of course, that range, that dead cat bounce area of 1658, that'll close the open gap that was created between August 26th and August 27th. The low of that gap is 1656.02. I suspect that becomes the end of any bounce, the end of any move up there, and that's on the S&P 500. Yesterday was a rejection of that 1650 level, got up to 1651.35, 1650 happens to be a primary trading range boundary, so it didn't get up and test the top of the August 27th level. That would have been more bearish. That number is 1652.54. And that would have set up its real first resistance area. You see, when you have a gap, whether it's a gap up or a gap down, you really want to see three tests of that area in order to confirm for you that it is either a support or a resistance level. You know that it's it's going to be natural support or resistance just by mere fact of having that gap. But what you want to see is testing. That's right. Three tests to give you any kind of indication of whether it's a strong area of support or resistance. And then the beauty about that is if that area ever gets broken, you know that just the reverse will take place. Old support becomes new resistance, and old resistance becomes new support. So in the S&P 500, a move up to about the 1658 area is likely where the next sell will take place. If we go take a look at the Dow out here, The Dow right now, trade out at 14,870. Boy, this has its work to cut out for itself just to try to make a dead cat bounce. But we know that the Dow has been the weak link out here. The dead cat bounce inside the Dow would take you to 15,104. And if it gets up there, 15,104, well, that'll break the descending price channel. And it's going to be from weakness that we need to understand what's going on inside the marketplace out here. The Dow has been the weak link out here. If somehow the weak link starts to gain some energy, maybe it's that little engine that could eventually, and of course, part of that would be some type of conviction coming into IBM, in my opinion, because IBM is right down around the support level. So when we're taking a look at these markets, we want to have on one screen or on one chart, we want to be having IBM up there, just as we do by taking a look at the Dow and watching that little descending price channel that it has been traveling in, and that's after it made the highs back there on August the 2nd. Of course, for the descending price channel, my recommendation is use the actual open of August 5th. That open price is 15,651.98. Make that be your first touch point. Your next touch point that I would use is the open of August the 14th, and that was at 15,447. That's along the top, along the bottoms, and this is great because we've got all kinds of new folks inside the Tiger's Den, so welcome to all you new folks that are inside there. There's an incredible place to be. You know, it is always about your peer group, and there's no better peer group than the folks inside the Tiger's Den. And for any of you listening out there, as long as you are a TFNN member, and if you're not, you've got to ask yourself, why not? Because it's real easy to sign up for it. All you do is go to the homepage at TFNN.com and sign up for our $10,000 virtual trading competition program. It takes you about the total of maybe, 15 or 20 seconds to sign up. Then you'll all of a sudden have a TFNN account, and you'll get access to the Tiger's Den for the next couple of weeks out there. That access is going to give you to HD charts, high-definition charts that each of the contributors here at TFNN provide. Of course, watching on Tiger TV, that's a beautiful thing, or listening on the radio or your mobile device at TFNN.mobi. We just simply want you to be able to listen in to us, and we appreciate you doing that. But don't forget, we've got about now a little under 25 hours, a little under 26 hours, I should say, for you to be able to sign up for that $10,000 virtual trading competition. Now, we have 70 total prizes. 10 overall winners are going to receive cash up to $3,000. First place out there is $3,000. Another 10 runner-ups are going to get an autographed copy of Tom's best-selling book, The Art of Timing the Trade. 5 people, 25 folks a day, 25 folks during the trading week next week, because all begins next Monday, are going to receive $100. 5 people a day just going to receive $100 just simply for placing a trade. Doesn't matter whether it's a winning trade or a losing trade up there. So remember, you must sign up by tomorrow, 12 noon time frame. 12:01 will not work. It's an automated system. It wouldn't matter who you are. It doesn't matter who you know. If you're not signed up, well, you're just going to miss out on an incredible opportunity out there. Now, the opportunity inside the Dow. So I just gave you the descending price channel. Prices will move inside channels, trend lines, and so forth. The trend line here inside the Dow that it finally broke, that's a trend line. That's the red diagonal line you're looking at on my screen. That's the trend line coming off of the November 16th lows out there. Your touch point on that is going to be 12,471.49. Your next touch point is going to be that low from December 31st out there at 12,883. You can see when price moved down into the June 24th level, price tested that trend line, rejected it, and moved up. What did we have take place here back on the trading session of August the 16th? A break of that trend line. Now, what oftentimes happens, I don't know the exact percentage. I can tell you it's a significant percentage. It's like, the 80-plus percentile range. When you break a trading range, price will try to get back inside the trading range. And that's something that the Dow has not done. And that's why we really need to be paying attention to the Dow chart out here, because from weak hands, we will get a ton of information. And the question's going to be, will price stay within this narrow-banded descending price channel? Or will it get up at least to the 15,104 level? And if it gets up to the 15,104 level, which is a dead cat bounce, it'll break that descending price channel. And why is that important? Well, it's important because that could be a real break. Because, you see, prices are moving to the downside. And a real break would be a break to the upside. A break below that trend line or the channel line doesn't mean anything because prices already are on the downside out here. So it's really the upper portion that's going to be very key for us to watch. Then, If it can close above that, then what price would do is price would head up and try to get back inside the larger trend, and that's where it would run into some significant resistance out there. So it's on the Dow chart, believe it or not, that we've got to pay close attention to. If we go take a look at the Russell 2000, that has been the strong hands out there, so it's important to take a look at the strong hands out here. If I pull the Russell 2000 back, we'll see that trend line. That's coming off of the November 16th low. That's my first touch point. The next touch points out here are back in the April 18th time frame. We can see here that price had broke that trend line back on June 24th, but post-haste, meaning the very next trading session, price got right back up inside there. Why is that trend line important? Well, because you can see a similar descending price channel out here coming off of the August 5th high out here inside of the Russell 2000. We can see that price channel was broken. We can see that what price is going to try to do in the Russell is get back inside there. So it's going to be important to watch the strong hands inside this market as well. Now, if we take a look at just normal retracements off of the high, that would be your August 5th level. 1063.52 was the number, all the way down to the low that was put in here yesterday. You'll see that the dead cat bounce will take it at 1029.83. At 1029.83, it gets back inside that price channel. If it can do that, that sets up a move probably to the dead cat bounce, not the dead cat, to the 0.618 retracement right around the 1042 level. So we'll be watching the Russell 2000 as well. Of course, it is going to be the NASDAQ Composite and the NDX 100 that are going to be the real keys here, because they created the most bearish of topping patterns, and that was the island top reversal. Now, the composite is what I've got up on my screen here. The low of the island is actually the low of the island, really is going to be the trading session here from August the 23rd, and that low is going to be 36.43 and 86 pennies. You close inside that, and guess what? It no longer is an island. That would be a big ship that just docked and has got its ladder out and ready to pick up those passengers, and the question is it ready to move higher? If you get a close above at any point in time, close above the top of that island, that tells you that they've picked up all the passengers. They're ready to shove off and move to higher ground, and that's where they close above 36.8422, and that's going to be really important to watch, because when you take the most bearish of reversal patterns and it fails, it tells you there's some strong momentum to the upside. Same pattern inside the NDX 100 out there, which would really be inside the Qs, and we'll take a look at the ETF structure, when we come back from the first breakout here. But on the NDX 100, the key number to be paying attention to, which it's trading into right now, and that's with the help of Apple out here today, and that's the August 23rd low. That low, 3112.87. Right now, it's trading out at 3112.72. So it is trying to pick up the passengers on that island reversal. That's in your NDX 100, and the key here, it'll shove off that island if you see a close above the 3147.87 level out there. That'll tell you that you've got a strong trend that is underway. If we go back here real quickly and take a look at Apple before we go to the break here, we've got Apple that is trading up a total of, come on, button, switch over. Apple is up about $10 right now, $9.74 to be exact. Our call number is 877-927-6648. Hope you're having a wonderful Wednesday, folks. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 52 points right now. S&P is up 8. NASDAQ up 23 points. And let's go check in on the EKG of the markets. Let's go check in on the 30-minute futures contracts out here. Let's go see what we have going on now inside of the S&P futures, the ES Mini out here. As price was pulling back yesterday, it was pulling back, and it was doing what? It was closing the gap that it created from the close on Friday. As it was pulling down, you can see that price was getting what? It was getting, if you're watching this on Tiger TV, you can see a couple of different relative strength indicators that I use up here. Look at the one with the red squiggly line. That's using the 14-period exponential simple moving average. Actually, inside that, inside using that RSI indicator out here, we can see as price gets below the 30 level, that tells us that the market on the 30-minute chart is getting into an oversold condition. Of course, the real key here was that we got a little bullish reversal signal, and that took place right here, right at this time period at 3 p.m. Now, how important would that be to you, especially if you were trading the virtual competition out there, to understand your candlesticks out here? Because it's really the cool thing about candlesticks, folks, is that bulls and bears can't hide. They just cannot disguise themselves, and that's what you're looking for, reversal signals. And it doesn't matter. You don't have to be a day trader. I'm not suggesting that that's what you do. The nice thing about the intraday charts is that you can use those as really an educational tool to watch pattern price behavior out here. Because if you're on a longer term horizon, in your 401k accounts, you should really be focused on what's going on a monthly, weekly, and a daily chart. Paying attention to a 30-minute chart isn't going to help you out a whole lot. And, well, depends on how you're managing those accounts. But I'm assuming that you have a longer term horizon on that. Well, in the case here at 3 o'clock yesterday, you got a hammer candle. This was after price was moving down. You were probably wondering, maybe somebody out there was wondering, how was it that the futures opened up so strong and then they sold off from about the 10 o'clock time frame as they were up at the 1650 level and pushed all the way down. And why did they stop where they stopped? Well, folks, just like at Thanksgiving time, which is really probably right around the corner, right? We're already into September here. Just like when you sort of overeat. In this case here, the market was overdone to the downside, and it has to work that off. And that condition is going to be worked off by either traveling sideways or moving up when it's an oversold condition. Same thing when it gets into an overbought condition. So we have the bulls in place right here. They got the hammer candle, follow through on that very next 30-minute trading session at 3:30 yesterday. And then what did we see here? We saw a nice retracement. What kind of retracement? You bet. Sweet old 618. Go from the high yesterday at 10 o'clock all the way down to the low of that hammer candle. You will see the 0.618 retracement level, 1642, basically 1642.50, got up to 1642 and a quarter at 2 o'clock this morning out here before it gave you a reversal signal. So it was doing normal things. Now let's take a look at the retracement that we see coming off of that hammer candle. And why is that hammer candle important? Because that tells you that's where the bulls are hanging out. That was strong support. Now, if we go from the low of that hammer candle up to about 2 o'clock this morning, you will see that the retracement takes you right back to where? Exactly. The 0.618 retracement level, 1635 and a quarter, and it got down to 1635 even Steven out here. So now what we're seeing is an A to B equals C to F pattern. Here's another pattern that's out here. If we take a look at that, let's go take a look at the strength behind this move out here. Your B point is going to be that high at either 1:30 or 2 o'clock this morning, and our C point is going to be coming down. Well, let's see, we had 1635. Do we have 1635 and a quarter? We had 1635 at 10 o'clock. And there's a C point that came in at 9 o'clock this morning. You can see it's done the 1-to-1 A to B equals C to, but take a look at that little explosive move up here. It says that it wants higher price. Now, what's going to happen, and doesn't have to be necessarily during this next half-hour trading session, but it most certainly can be during Basil's show or the show after that as well. So sometime in the next couple of hours, what we should see take place is we should see a market begin to pull back. Why is it going to pull back? Well, just take a look at the S&P futures contract on the 30-minute chart. It's now up above the 70 level. When you get above that 70 level, you start to get into an overbought condition. Just like here, when we took a look at the ES Mini on the way down, it got into an oversold condition down here at about 12 noon time frame, but it kept pushing lower. It can push lower. What you're waiting for are reversal signals. What you want to do is you want to prepare. You want to understand that what is likely to take place out here. And what's going to be real key today is going to be, what does that pullback look like? Is that pullback? Is that retracement? Is it just a normal retracement? Meaning, let's just use hypothetically, because that's all I can do at this moment. Let's assume that the market is listening to us here at TFNN, just like you are, and decides it's going to pull back, and it says, you know what, that 1647 level that it hit just a few minutes ago, that it's now going to begin to pull back a tad. Well, if it only pulls back to 1642, that would be just a dead cat bounce, and if it resumes higher, that tells you that there's some real strength in the move. Even if it pulled back to 1639, that too would be normal. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 55. S&P is up at 8. And looks like we're getting just a bit of that move to work off that little congestion of being in the overbought territory. That's a 30-minute chart on the ES Mini that we're paying attention to here. So the real key is going to be, the retracement here. Now, what you really want to be watching, whether you're long or short, doesn't matter. When you take a position in the market, you take a position. Then what you want to do is you want to be able to step back and you want to start taking a look at both from the bullish and bearish side out here. So let's assume that the market decides to go ahead and work off some of that, digest some of these early morning gains out here. The key you want to really be paying attention to is this candle, this 30-minute candle here. That's anywhere from the low of 1642.50 up to 1647. If you can get some nice small-bodied candles to take place out here, work off some of this overbought condition out here, and then once you see a close above 1647.25, that tells you that the larger pattern is in play. And where's that larger pattern going to take you to? Well, just do the same, use the same tools out here. Take a look at the retracement from the high out here. I'm coming back to a swing point, a major swing point, back at about 12:30 in the afternoon. That's on August the 27th, down to the low that was put in here at 10:30 in the morning on August 28th out here. Well, you can see that the 1650 level, in fact, 1650.27 happened to be 1650 and a quarter was the 0.618 level. And I was working on a real small screen yesterday, and I overlooked it. The actual high that we saw coming in at 10 o'clock was 1650. How's that for a 0.618 retracement level? In any event, 1657 is the next target range. That is assuming that you get some follow-through inside this trading session. So you should be expecting, just simply utilizing these indicators here, you should be expecting the market to either pull back, move sideways or something. Just, and we did this as the market was moving up into it. So that's what's very cool about utilizing a set of tools like this. And I'm going to be doing an online Master Trader series here in the next couple of weeks. So we're working on the details of that. And if you would like to really learn how to utilize these tools so that it can improve your trading on any time frame, you'll have the opportunity to sign up for that. And in any event, let's go take a look here at the currency market. Z in the den was asking about the euro, so let's go take a look at the euro currency pair, the Queen Euro-US dollar currency pair. Now, I've got a daily chart up on my screen here, and we're taking a look at a number of different potential patterns. Now, the ideal buy pattern inside the euro, and this is still in effect here, is a 0.786 Gartley buy pattern, but that's down way around the 124.48 level, 125-ish level. That's on the longer term. So I've already got a longer term buy pattern that is mapped out here inside the euro. What we want to pay attention to thus far is right now the euro is neither overbought nor oversold. So it has room to run to the downside. And if we just take a look at normal retracements, that would be coming off of swing points, and that would be coming off of your swing point low from July 9th. That's at 127.54, all the way up to the high that was put in as it tried to take out the swing point from June 19th. That high that I'm referring to is from the trading session of August the 20th. August 20th, it gets up to 1.34509. Had some nice momentum underway. You can see what the euro has done now. It's pulled back to the 0.382 level. That's a normal retracement inside any move here. What's going to be key right now as far as the next level of potential support is going to be that 200-period exponential moving average. And that's down not that much lower than where we're trading right now. It's actually at about 1.3116. You're at 1.3169 out there. So that's where it wants to pull back and test. If it can bust through that area, a normal move is to the 0.618 level. There's no A to B. Well, I guess there's an A to B equals CD down. We can take a look at that. It's a small one, but let's look at it nonetheless. That would be coming off of the high here from August 20th. Again, that was 1.3450. Your B point is going to be this little doji candle from August 22nd, the low there, 132.97. And then your C point is on the very next trading session. So you can see it's made the 1 to 1.618, A to B equals CD down pattern out here. But what it has not done is you have not seen any kind of bullish candle out here. So no bullish candles. Guess what? This wants lower price, and most likely this is the range, 1.302 to 1.3116. That is on the euro U.S. dollar. But longer term, the pattern that is still in effect here is the euro pulling all the way back into about the 125 level out there. That's where you've got a larger A to B equals CD down. That A to B equals CD down looks like this out there, and that's why I've got that area targeted at 1.24489. This move up here did not violate that pattern on August the 20th. In fact, it's the move back down that is really confirming that that is a potential out there. So that is on the euro U.S. dollar. Let's go check out some of the other currency pairs as long as we're in this section. Then we're going to check out the hard currencies, and that is Goldilocks and silver. Let's take a look at the U.S. dollar, Japanese yen. Here's a nice little Gartley buy pattern that came into effect here on August the 8th. If we take a look at retracement levels from the A to the D point, the A point on this is the A to B equals CD down. That would be your July 8th, 101.52 is the number, all the way down to 95.78, and that was on August the 8th. What we can see here is prices now firmly above the 0.618 retracement level, which was 99.35. It came into that area with a wide-ranging bar. That tells us that it actually wants higher price. That next level, 100.29. If it gets above that, folks, that will not only set up just a move, which would get you back to 101.52, that might actually set up the next A to B equals CD up. That is on the U.S. dollar, Japanese yen. If we go take a look at the Great British Pound, looks like that is starting to move a bit to the upside here. This completed its 1-to-1 A to B equals CD, and this has only backed off into the .382 retracement level where it formed a hammer candle that says strong support inside the Great British Pound U.S. dollar at 1.5426. This is going to make another run for the highs out here, and if all we see is a back off of only that .382 level, the next run inside the Great British Pound should take it up into about the 1.589 level. That's the Great British Pound U.S. dollar. Now let's go check out the hard currencies out here. Let's go take a look at Goldilocks, trading off 21 bucks and change right now, creating a little bearish engulfing candle. Yesterday, we had the, give me a second here, we had when you take a look at retracements, you want to take a look at the larger legs, you want to take a look at the smaller legs as well. Right now, this says gold should pull back to about 1336. That's nothing more than a dead cat bounce of that A to B equals CD up in the marketplace. Let's take a look at silver out here. Silver back about 3.5% right now, off about 88 cents. A little dark cloud coverish type candle that is creating here today. Silver, though, does want to pull back to $22.47, maybe even $20.83, and that would be a nice buy. Of course, what you can see here in silver, just simply working off that overbought condition. Let's take a look at light sweet crude. That's trading down about $1.11 right now, about a 1%. Light sweet crude, the next trade on this, you could have taken the short side here, maybe even this morning. Now, what light sweet crude is doing is trading in a $7 consolidation range. So what you want to do is if you trade the ETF structure, what is it? The SCO, the UCO, one short. SCO, I would imagine. S stands for short. And UCO, U must be for up, right? And so you could trade either of those ETFs. And what you want to be paying attention to, your next trade set up on the long side, you'd like to try to catch light sweet crude at about the 103 level, and to the downside right around the 109.50. It's about a 7-point trading range that it is traveling in. Once it breaks and closes above either of those two levels, 102 below or 109.50 and above, you should see another 7 points inside the move. That's within side light sweet crude. Quick peek in on natural gas out here. Natural gas just taking a little bit of a rest, making the .786 retracement here. Been a nice steady move up off of the low, off that key reversal session on August the 8th out there. 877-927-6648 to give us a call, folks. We can take a look at your stock chart. Let's go take a look here at some of the things that are popping and dropping in the marketplace. We've got LinkedIn. LinkedIn looks like it's coming a little bit unlinked. Let's go take a look at the move behind this. We'll take a look at any kind of volume. LNKD is the ticker symbol. It is the leader in the clubhouse, down $7, but not too bad, and volume doesn't look too bad out here as well. LinkedIn has a nice big open gap, wide price spread, accelerated volume that was that took place on August the 2nd out there. Now, this is a perfect example. Let me see. Was this an island reversal? So here's a perfect example. Remember, if you were listening to us earlier in the show, we were taking a look at the importance of taking a look at strength and taking a look at weakness. Now, on the strength side, what we were looking at was we were looking at the trading session. We were looking at the island reversal. Well, LinkedIn also had an island reversal. That was formed here on the 3 trading sessions, May 1st. If you take a look at the May 1st high, 195.50, the low on the very next session as it gapped up with accelerated volume. The low was 196.43. And then with accelerated volume to the downside on May 3rd out there, that created this little island. Once that island was taken over, and that took place right here, price got back up into the island, so the boat docked. That was on July 11th. 2013, and as soon as price got above that area, and that took place right here on the trading session of July 18th, that was communicating a strong continuation move to the upside. And look exactly what happened inside LinkedIn. It gapped up. That's a gap right now that we want to be paying attention to. That gap is anywhere from the high of August the 1st. That is at 213.48. The low of the gap, well, I'd have to say right now because it traded inside the gap August 16th. That's at the 222.22, room 222 out there for all you old-timers. That is where the gap is inside of LinkedIn. A nice buy on side. This would be a closing of the gap. That would be out at about the 213.48 level, assuming that volume on this is pretty light. So far today, even though it's a leader in the clubhouse to the downside, I'm not seeing any kind of technical damage to this equity at all. That was on LinkedIn. Let's take a quick peek here at Ryanair. That's down about 12%. RY RYAAY is the ticker symbol out there. RYAAY. Let's take a quick peek at this. So this thing has gapped down with big volume out here. So far today, down with 1.2 million shares. That's big volume for this equity. Let's go see where Ryanair is going to trade into. We need to take a look at probably a longer-term chart on this. Let's take a look at the weekly chart for Ryanair. So Ryanair, the next swing point with any volume. Boy, this is a dangerous thing because the volume on this chart takes you back to about the $28 range. It's at $42.92 right now. This thing here came into the gap, did it this morning. That gap, clearly not an area of support, and that was the May 17th level. That high was 45.31. Let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How are you today?
Good. How's it going? I'm looking at INTC.
Intel. And are you ready to buy, looking to buy, ready to sell? Tell me what you're doing.
Yeah, what do you think? What do you think? You know, is that a bullish engulfing thing there going on? And it's going over to 50-day, 20-day, and all that stuff. And there was a semiconductor fire overseas. Does that have anything to do with it?
You know, right now what it's doing today is nothing more than it's gapped up today. The candle itself would be called the bull separating line. The reason it's called the bull separating line, if you take a look at yesterday's open inside Intel, Victor, the open was at 22.21, and today's open was above yesterday's open out there. Now, yesterday's open was a down candle. That's why it would be considered a bull separating line, which is very bullish. But what it's also doing right now, Victor, it's running into resistance, which happens to be the low of that hammer candle from July 10th out there, and that low is 22.64. So if you wanted to go along this equity, you need to see it close above that level, which was an old level of support, and now it's become a line of resistance here. So the number that you want to be watching is 23.30. Now, Victor, if it closes at 23.31, that's not a lot of conviction behind the move, but something above that area. And then what you'd ideally like to see is you'd like to see price come back and test the 22.64 level and prove itself that it is now a level of support out here.
What level was that? 21.64, you said?
22.64. If I said 21, my apologies. That's the July 10th hammer candle. That hammer candle out there should have held as a strong support, and once it failed, that line has become a resistance line. That's what it's traded into so far. The intraday high on this, Victor, is 22.28 out there. So if you're looking to go long,
50-day and a 20-day, do you use that at all? And,
sure, we can put those. Yeah, we can put those up on the screen for you. So
mean anything or no?
It's trading below that area. So if we take a look at the 50-day and the 200-day, you've actually got we had a cross. So we had a death cross inside of Intel, and that took place, it looks like, maybe back on the trading session around August 28th out there. So to a certain extent, if you're going to use moving averages as your keys, this one here gave you the death cross, which would be very bearish. And quite frankly, breaking that hammer candle was a bearish signal back on the hammer candle from July 10th, and that level was broken on August the 8th. So on August the 8th, you got a signal well before the moving averages.
Maybe this is everybody selling before the holidays start tonight.
That could be, yeah, very, very much. I mean, could be, but so those are the parameters that I would be looking for inside of Intel if you're looking to go long.
All right, thank you.
Bye. Hey, my pleasure. Thanks so much for calling, and have yourself a great day. Right now, we got the Dow is up 57, S&P is up 8, Composite up by 22. Leading the charge, the upside here is Apple. Rochester Medical, that was on a buyout. That's trading out at about $28. That was up 40%. Biogen, BIB, up $5 and change. Let's check in real quickly here on BIB. Let's see what that is doing. One of the stronger biotech stocks out here. BIB going to be heading up towards its resistance line. That was set up by that little downdraft from June 13th out there, right around the 235 level. It's trading at 227 right now. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 66 points. The S&P is up 9. And Happy New Year to all those celebrating the Jewish New Year beginning tonight. You know, there is a philosophy in the markets. Victor touched on it briefly during the call-in there. Sell on Rosh Hashanah and buy on Yom Kippur. I don't know if I'll have a chance to do the study on it. I used to have a study, and I tried locating it. It's in a spreadsheet tab somewhere. I just can't locate where that is, so I'd have to go back and redo the workout there. It has a really great probability of success, but nonetheless, what you should really do is trade the patterns that are out there. one of the patterns that we want to be paying attention to is the net advancing issues at the end of the day inside the New York Stock Exchange. The number needed for the Bulls to take over the ball, it would be deep in their end zone, by the way, is 636. Right now you've got net advancing issues of 1024 out there. Why is that important? Now, I don't have this chart here updated inside of my chart for the last couple of trading sessions. Maybe it was just yesterday's trading session, actually. I just don't have it updated. But at the bottom of my screen, we've got the McClellan oscillator. And just to give you an idea here, each time it gets above the zero line, the zero line is that black horizontal line going across the bottom portion of my screen out there. Not the one at the bottom. I'll just go ahead and delete that one. That way it won't confuse you for those of you that are watching or listening or watching the archive. So it's this black line here where my cursor is going across. Now, if we come back here into the November 15th time frame, you can see the oscillator cross back above the zero line and take a look at price. What did price do as it was back above the zero line? That's right. Came back, tested it, got just slightly below zero on December the 14th, got back above it the next session and moved higher. So you can see it's very important to be paying attention to this oscillator. Now, it can move sideways, and that's a potential for what we're at right now. In a choppy market, on any system out there, a choppy market, they become somewhat difficult to trade. Of course, the beauty of it, choppy market, a sideways market, is consolidations are going to resolve themselves to equal to or greater than that consolidation zone out here. So here's a little bit of a choppy time period utilizing the oscillator that was back between the January 30th time frame and really about February the 19th before it went ahead and cut loose out there. So this is one of the reasons that we're paying attention to it. It's possible we could see a reading move above the zero level. The last time that we were above zero was on July 26, 2013. That is how long the bears have had control of the market. Now, what's key here when you take a look at the New York Stock Exchange, so when we put together a number of tools here, the bears have had control of the ball for over a month now. And if we go from the June 24th swing point low all the way up to the high that was put in here on August the 2nd, what you're going to see in the NYSE, about a 50% retracement. Just, not that much below that 0.382 level, but hasn't even gotten back to the 0.618 level. And the Bears have had control of the ball for a month out there. That's got to make you say, something to think about. In any event, today you want to be paying attention to the number of 636 out there. I believe it's 636, 637. Look, if you get 640 and you're just slightly above the area, that's not exactly conviction behind any move. So it just means that that maybe that they got the ball and they're sitting there on the 1 yard line, and that's not the best place when you're on the offense to start your drive from. In any event, if the New York Stock Exchange can close above today 93.72.92 as well, that'll be important because that'll be inside the gap that was created from that downdraft on August 27th. So the NYSE, that's one of the equities that you want to be paying attention to. We didn't do the ETFs. My apologies. Maybe Basil will pick up on that. We'll quickly switch over here to the daily inside the Qs because that's going to be what we're going to be paying attention to today. And it looks like here the boat is arrived on the island because it's inside that August 23rd low at 76.40. That island reversal, folks, if that gets taken out, you'll see some momentum moves to the upside. Folks, have a great Wednesday. I look forward to seeing you tomorrow morning. And just have a great day. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.